Alright, hey guys, how's it going today? Hope you guys are doing good, trading's going well. Today is Tuesday, my dudes. We are going to do the usual morning scan. First gonna look through like some news articles, see if there's anything moving the markets in particular, and then we're gonna go look through some trades in the PA terminal. We'll go through earnings and forward vol, and then maybe try to find one or two short vol trades or long vol trades in the volatility insights. So let's dive in, I guess. So opening Wall Street Journal, we're seeing stocks falling after retail sales data. I guess people are also spooked about the debt ceiling and whatnot, but other than that, I don't really see anything particularly interesting here. Hang on, I just realized I'm showing you guys the wrong screen here on Discord, so let me just switch you guys over. Change windows. There we go. Alrighty. Yeah, so just the debt ceiling, I guess, and not too much else I'm seeing. Let's quickly open Bloomberg. Inflation in Canada. No, I'm not really seeing anything particularly interesting, so we can go straight into the scans. Opening up the PA terminal here, I'm going to open earnings, because that's always usually the most interesting stuff. We're going to look for today's earnings, add a couple columns here that I like. And what I usually like to do is I'm just looking for stocks above $20 with enough options volume that it's actually tradable, and obviously confirmed and whatnot. So we've got two today. We've got TJX and Target. My eye's going straight for Target because that's a company I recognize, so let's look at that first. It's looking like Target's not really a good stock to sell vol on before earnings historically, with the straddle up like a ton. Excuse me, I gotta sneeze. Excuse me there. Yeah, 500% in straddle returns, so you've got an implied earnings move of less than 7. Absolute, on average, is more than 8. So it's just been a loser for like the last 2 years. Yeah, not really the best stock. Especially in Q2, we've seen moves as big as like 25%. Maybe I'm going to stay away from this one in the for now. TJX, on the other hand, let's see. Implied earnings move of 4.6. Average, less than 4. Straddle performance is okay. It's lost 82% overall, but then it's pretty inconsistent. So selling vol here is going to be kind of sketchy at best. Let's take a look at the move versus the realized jump. Well, that looks a little better. So there's been a couple of bad quarters here, but for the most part, the implied earnings move is like way bigger than what actually the move you actually see at the open. So that's pretty good to see. Maybe with the Q2 earnings being the most volatile, I'm getting mixed signals from this one. I guess if you had to put on something, you would put on TJX instead of Target. We can try to price this out real quick. We're going to go to Thinkorswim, put in TJX, and let's sell the at the money straddle closest to expiration. Stock is 78.70, so let's sell the 79 straddle and see how that looks. And as usual, we're going to sell one because we don't want to explode, and let's analyze the trade. So this is the straddle today. If we move it tomorrow, we get a little bit of theta decay, but that's not all because we have to account for vol crush. So back to the terminal, we see that our expected IV crush is 15%. So let's plug that in and see how that works, or how that looks, rather. So if vol falls, nope, that's up. That is the wrong sign. That is the wrong sign. Okay, if vol falls by 15% and it completely pancakes and opens at like maybe like 78, 79, you're up maybe like $90 per straddle. That's all well and good, but obviously we have to look at our max risk as well. So let's take a look at what our historical moves look like. You can see they're not usually above 7, but we're going to stress it to 10% just in case something really bad happens. So let's plug in Oh, it is already 10%. And if earnings blows out, I don't think the vol is going to fall too much, so let's have vol basically be unchanged and see how that looks. So if the stock drops 10%, you're down at like 450-ish, or about $400. So you can consider your max risk to be about $400 for this trade, but your max profit is around 90. The risk reward is not great, as with most short vol trades, but this is one that just typically works out for the most part a little bit, and you know, when it goes bad you get slapped, but that's just the nature of these trades. So if you're looking for something to sell vol on before earnings today, TJX looks okay. I'm not super excited about it, but it's there at least. Let's zoom in here a little bit. Yeah, so that's it for earnings. Moving on to forward vol, let's take a look at what's up here. Just gonna add myself some columns here, remove a few. Alright, once again we're looking for $20 stocks or more, because the smaller stocks are pretty hard to trade. We want clean data. Yes we do. So $20 stocks, 3,000 in volume. Look, the minimum is 4,000, so we're good here. We don't have to do that. We want stocks with weekly options and no earnings. What does that look like? Let's see here. We've looked at a few of these before. We've seen PDD has earnings that just our vendor or data vendors kind of screwed up, so we're gonna ignore PDD. We're also gonna ignore EWZ because the term structure is actually pretty flat, and it's just that that particular expiration is a little wonky. EWC is new though, so let's take a look at what's up with that. It looks like the 3064 factor is really high here. Let's take a look at the term structure. Yeah, it's got like a wonky 30-day to expiration. Let's go see what that's all about. Maybe there's a trade there, but it doesn't really look like it. Normally I'd like to see like a consistent slope, not like a weird inverted W. No, EWC with a C. So you're seeing 20% vols for the shortest day. Yeah, so for some reason there's like a 16 and then a 21 and then a 16 and a 21. I'm not sure what that's all about. But the bid-ask spreads are actually horrific. So this is not tradable at all. So we're going to ignore this for today. Well, while we're here, let me actually check my previous week's positions. I had a trade on like KRE or something, and the fact that it's not even on the scanner tells me that the term structure must have flattened out. Yeah, that looks pretty good. So before, maybe like last week, the term structure was very, very steeply sloped, and then we put on a few calendars, but it seems like the forward vol has caught up, so last week's trade worked out pretty well, I'm guessing. Okay, not too much for forward vol today, but that's alright. As long as we run these scans every day, we'll find these opportunities when they show up. Now, for vol insights, today I found a ticker EWT on my daily vol scan. It's got an IV-RV of like 1.48, and the forecast as well is looking pretty good. So we're just going to try to build a vol forecast and see if there's an edge selling EWT options. As usual, I'm going to pull up my notepad because my memory is absolutely terrible. I'm just going to move that here like that. So the first thing we want to note is that implied vol is 1626. And then I'm going to make this bigger for all of you. Now let's try to build a forecast. Let's use absolute valuation first. So first thing first, we can take a look at our forecast volatility. So the PE terminal takes a blend of IVs and RVs and kind of tries to forecast the future volatility of the stock. And right now we're getting a number of 1273. So we can note that down as our first forecast. Our second forecast can be just realized volatility, because vol clusters, meaning that yesterday's vol is probably going to be the same as tomorrow's vol. And you can see like vol doesn't really move a whole lot. It's like flat. Maybe it drops a little bit, but then after that it's flat again. You know, there's obviously like a jump probably from like earnings or like something like that. But for the most part, if vol is like 20 now, it's not going to be like 35 in the future, right? So it's a pretty decent bet that vol will remain the same unless there's news coming out that we're not worried we're not aware about. So let's just note down realized vol is at 1134. Another thing to note is that implied volatility, it tends to be the market's prediction of what future volatility will be, plus a vol risk premium. So if you look at something like the S&P, for example, like you'll see that over time, like implied vol tends to just try to follow realized vol as best as it can. But of course, like with a little bit of a premium over time. So if we take out the vol premium, we can have a pretty decent guess as to what the future volatility is going to be. You notice that there's like maybe like, I don't know, a 5%, 5 to 10%-ish vol premium over time, and we can kind of just look at that in the relative value as a ratio even. We ignore SMH for now, that's for later. You can see that there's a fairly consistent vol premium of maybe between 1.5 to like 1.7-ish, but like you can see it's kind of mean reverting, and like there's like kind of like an average level that the vol premium reverts to. Oh, this by the way is the IV over RV ratio. So on average, EWT's implied vol is about 1.5 times to 1.7 times the realized vol. Looking at some key metrics here, we can kind of see that the IV-RV ratio on average is about 1.45. So you've got a pretty big variance risk premium here in terms of like percentages, but obviously EWT is slightly lower in terms of IV, so the actual edge is going to be like a couple points. So if the average vol premium is 1.45, we can take that out of implied vol to kind of get our like estimate of realized vol. So let's just kind of pull out a calculator in a second. Implied vol minus the average variance risk premium. Calculator. What's our implied vol at? 1626. And if you divide this by 1.45, you know, maybe the market's pricing in an 11% vol, but with the variance risk premium, it's 16. So our estimate of realized vol here can be 1121. So we have 3 forecasts just based on historical data, but we can go one step further and try to compare. We can compare implied vols with a similar correlated stock. So EWT is a Taiwanese ETF, and major holding is a TSM, which produces like a lot of semiconductors for like NVIDIA and AMD and whatnot. So I think SMH makes for a pretty good correlated ticker, and looks like the terminal agrees. You can see that like there's a pretty decent correlation between EWT and SMH returns. You can see the rolling correlation. It's dropped a little bit, but it's still like 0.74, 0.75. It's never really below 70%, so the correlation's pretty good. You can see that even though the prices are diverging, that generally once both stocks go up at the same time, it's just that EWT doesn't tend to move as much because maybe it's a little more diversified. But the general trend is the same. When one stock falls, the other stock does as well. Hopping over to the relative value tab, if we plot SMH and EWT's IV-RV ratios, we can see that the vol premium here is just much higher for EWT compared to SMH, and this is just like over time. So if you bought SMH vol as a hedge, you would probably do pretty well. Yeah, I don't really know what this means for like relative valuation though, because we can't really assume that EWT vols should be at SMH levels, because there just seems to be a bigger risk premium. This is probably because you know, EWT is like Taiwanese, and you know, China's like right across the ocean, sea. I have no idea, but like you pop up on Google Maps, obviously like Taiwan's near China and stuff. Everyone knows that. So there's always like the risk of like geopolitical whatever's going on, I guess, and that's probably explaining partially this risk premium. So maybe we kind of skip the relative valuation today. Yeah, because it doesn't make too much sense for us to assume the vol should be similar in terms of like the premium anyway. But what we do know is that there is a big vol premium. We can kind of just build our forecast based off historical data then. What we do is pop out our calculator, and we have several forecasts, so we can just kind of average them out. and hopefully the better forecast kind of we get a better forecast than just picking one by itself. We can average 1273 plus 1134 plus 1121. We get an average of 1176. So our forecast is 1176. So let's go check how straddle prices look when the vols are actually dropping to 1136. We got a calculator and options price. I didn't note down the price, so I'm gonna need to figure that out. 4405. Okay, so if the current price is 4405, and because there was a dividend recently, I think the chain is like a little wonky. It's like down by like 19 cents or something. Nope. Okay, must have been no. There is. See, it's adjusted. So what we're gonna do is oh, there's like a future dividend or something like that, because this one wasn't adjusted. I'm not super sure, but that should be fine. The spreads look all right. If the stock is 44 right now, we'll sell the 43.81. How about that? 43.81. What do we get for a price? So the straddle is 55, which tells me that I've done something wrong, because I put in the strike as the implied vol here. Let me just fix that. You've got an implied vol of 16, and this should be a little better. Yep. So the current price of the straddle should be around 1.64. Let's quickly check our brokerage to make sure that's all right. 43.81. Did I do that right? Yep. Okay, 43.81. If we sell the straddle, the mid price is at 172, but the worst price is 160. So we're in the ballpark of a correct number. Definitely better than 55. But obviously there's going to be like a little bit of a... It's not going to be exactly at the mid price, because market makers quote like a spread and they use different models than we do, and like it's just not going to be exactly the same, but it's close enough, right? So let's say the current price is 1.64. What do we get when we drop the vols to our forecasted 1176? We plug in 1176 for our implied, and we get 1.1. We're gonna go 1.2. Let's say 1.2. So that is a $44 edge, if my math is correct, which it should be. And if I'm not mistaken, the straddle takes about $2,000 in margin. So just whipping out a calculator here, 44. Let's say $40 after like commissions and jet. 44 divided by 2,000. That's a 2% return in a month. That's not bad at all. So yeah, that's your daily vol trade of the day. If you guys in Discord have any questions, or did I go over anything too fast? Alright, so that's it for Twitch. This is the part where the community talks about any trade ideas that they might have that they want to talk about, but we don't show you guys that. So that's it for Twitch. If you guys want to get in on some of these trade ideas, join Predicting Alpha. I'm sure the details are somewhere in the description. So bye for now, Twitch.